Hello and welcome to our latest Money Show Money Masters podcast segment. I'm Mike Larson, editor-in-chief at MoneyShow, and today I'm speaking with Chris Camillo, founder of Dumb Money TV. Welcome to the podcast, Chris.
Thank you. Happy to be here.
Now, Chris, I've been familiar with your work for a while, been following it, and I know you also participated in the film This Is Not Financial Advice that we actually screened at one of our Money Show events in late 2023. So I'm glad that they made it to Apple and Amazon. Good for them. In any event, I want to know, for anyone who doesn't know what you do, what Dumb Money TV is, can you talk a little bit about what it is that you, Dave, and Jordan do and kind of where the whole idea came from?
So the three of us, for lack of better words, we're just investors. If you kind of go back 12, 13 years, we were like anyone else. We all had jobs and we led fairly conventional lives. We started investing for ourselves as self-directed investors, and over a number of years, started making more money as self-directed investors than we did from our conventional day jobs. And we all quit, and we just now have been in, really, we're just full-time investors now. About half of our world is investing in startups and early stage companies, and the other half is trading public markets, primarily focused on a methodology that I coined back in 2009 called social arbitrage investing, which a simpler way to say that would be observational investing. Similar in style to, Peter Lynch and what he did back in the 80s, for those, that can remember back that far. It's all about trying to identify change in the world, whether that's change in culture or consumer behavior or change in technology, or quite honestly, change in anything, and trying to identify that change or surface it quicker than others, and connecting the dots of that change to investable opportunities in the public market, to companies or sectors that would either benefit or be harmed by that change that's happening in the world. And it's really that simple. Now, there's kind of some structure around how you do that as an investor,
Sure.
and the process that you go through to identify, valid investments based on that methodology. But that's what social arbitrage investing is all about. And we created the dumbmoney.tv is kind of where you can find us. But it's called Dumb Money Live on YouTube. And we created that show really just to help educate the world and inspire the world to join the investor class. We believe strongly that every human on earth should be a self-directed investor. And, we've experienced, for lack of better words, a really abnormal amount of success as self-directed investors, turning tens of thousands into many tens of millions over a number of years for ourselves. And we wanted to inspire other people to do the same thing. So, we just do it for fun. Like, we literally run the YouTube channel for fun. We don't do courses or anything like that. We're just regular guys, just sharing our knowledge and sharing the roller coaster journey that we've been on for the past 15 years with the world through YouTube. And hopefully people can learn from our journey. And, we actually end up sourcing a lot of our trades from our community now, because we have, about 100,000 people in our community, and we have a lot of fun trying to surface change together and connect dots and vet investments and research and do due diligence together. And that's pretty much our world.
It's interesting that the social investing trend. I mean, we had at our Canadian event a couple of the guys that do something similar for the Canadian markets, and they just talked about how people are so much more open about things, finances, talking about them in a social setting that nobody would do 15, 20 years ago. And I'm kind of curious as to your take on that. What has this process been like where now, again, you have so much interaction with your followers and so much is just put out there for everyone to see?
Yeah. So what's so interesting when I use the word kind of observational investing or social arb investing is that it's a methodology that is approachable and relatable for ordinary people. So in the past, you might have had or felt that you had to have had a financial pedigree or some pedigree in mathematics if you're a technical trader. But being an observational investor, you're really the best observational investors are just ordinary people, right? People that are not in the finance industry, that are not mathematicians, that are able to observe the world and connect dots. So what's so fun about it is that we can actually grow a community of regular people. Like we have UPS drivers in our community, and obviously they're pretty valuable, right? In terms of telling us what kind of packages they're delivering. We have people in our community who work at restaurants and who are physicians, who are scientists, so it's like no matter what sector we're looking at, we kind of have people that have a unique perspective that in many ways is kind of more qualified than your average Wall Street analyst or buy side trader, because they're actually knee deep in that sector as a real person. Or if we're investing in something related to a sport, we have people that are knee deep in that sport, right? So that's what makes it really fun, is that this is actually a style of investing where regular people actually have an inherent advantage over the professionals. And that's what I love about it. So the larger our community gets, our combined knowledge base just continues to grow and grow.
Well, the social media landscape's obviously always changing. You've got some platforms that are gaining momentum, others losing it. Like evolution's constant, right? So I'm kind of curious how you stay ahead of that. I mean, where do you find the most valuable information today, above and beyond what you might get from your community?
Yeah, if you would have asked me that question, 12 years ago, I was primarily focused on Twitter, because at the time, Twitter was a place where people would speak about what they're buying that day, what they're doing that day, what they're watching on TV, what they're passionate about, what they're excited about. Over the years, Twitter has evolved into more of a news and political platform, and people are not expressing themselves in that way on Twitter anymore. So it's become a lot less valuable for me as a social arb trader. These days, I'm more focused on platforms like TikTok. And while I don't really create TikToks for myself, I spend multiple hours a day on TikTok reading thousands and thousands of comments on videos, because people are so transparent on TikTok. They really enjoy speaking about what they're buying, where they're shopping, what they're interested in. It's just this amazing platform of data and content that all of us investors have access to for free. And I've spent the past few years probably becoming, I feel comfortable saying I'm probably the world's #1 expert in interpreting data on TikTok. And it's something that I'll talk about actually at the Money Show, kind of exactly how I do that, with specific examples of where I've been able to surface change on TikTok quicker, even quicker than the data sources that the top hedge funds on Wall Street utilize to surface change. And I think, again, it's a really fun way for us ordinary people to have like a unique advantage over the professionals.
Well, you've talked. I looked at some of the recent content you've had on Dumb Money Live and some of the YouTube shorts. I mean, it was the investing mistake we won't make again in 2024, two sides of high growth investing, and even 'tis the season to monetize holiday trends. So I know you've got a little bit of everything there. In the time we have, you mind briefly recapping some of the pointers that you shared with your audience for those who are watching today?
Yeah, I mean, it's constantly changing, but something that we talk about a lot on our channel, and something that I'll talk about a little bit when we meet in person soon, is risk capital. I think the concept of risk capital and bucketing money appropriately so that everybody can have, sometimes I call it a big money account, but what it really is it's a designation of money. It could be in your account or in a separate account that is specifically oriented towards high risk investments. And what I mean by high risk investments, it could certainly be early stage, companies that you're invested in. But when you're investing in public markets, this is money that we invest with leverage. It's money that we invest in a concentrated manner. It maybe feels a little bit different than what we've been taught to do for our entire lives. And that's because it's money that comes from a different place. I call it, other people's money, and I wrote about that in my book back in 2010, Laughing at Wall Street.
Yeah.
This whole concept of, viewing every dollar for the $100 that it can be and that it should be. Because when I first turned 20,000 to 2 million between 2007 and 2010, that was 100x my money as just an ordinary self-directed investor. And I know that's possible, and I've done that many times since. So if we start to view every dollar in our life as the $100 that it can be, if we're investing it in an aggressive way, a really aggressive way, invest like rich people invest, right? You'll start to look at money differently. And we'll start to make trade-offs in our life. I mean, to some extent, many of us would start clipping $1 coupons that we would never clip a dollar coupon. Is it worth clipping a coupon to save a dollar? For $100, it might be. Is it worth delaying, a purchase by 6 months if we know that by delaying it for 6 months, we'll likely get it for $100 less? Probably not. But if that $100 is $10,000, okay, all of a sudden we are, right? Would we get the cheaper hotel room to save $100 over a course of a trip? Probably not, but maybe for $10,000. So if we start thinking of every dollar as $100, it changes our entire mindset. But the critical piece of that is then designating that money that is not really our money. It's not money that came from our kids' college education fund or for our retirement. It's money that we just wouldn't have had, that we only have because we made a trade-off, because we wanted to get that money to put it in this account so that we could take really big risk, maybe investing with options, investing with concentration, investing in the type of, trade that maybe ordinarily would say, not sure if I'm willing to risk my money in that manner. It's a psychological kind of barrier that we need to get over, but it's absolutely critical if you want to generate outsized returns in the market. Because with hyper large returns, and I have a track record now going on 16 years of over 60% annualized returns for 16 years, and that's fully independently audited. I'm only there because I was willing to take outsized risk with my portfolio. And the only way that we're willing to do that, because with big returns comes big risk. You just cannot get around that. And that's something that we have to come to terms with as investors. You can't have it all. So it's all about bucketing risk capital properly.
I guess in the time we have left, I mean, if you look at this current market and some of the opportunities you see, I mean, you talked recently about the first $10 trillion company. So I guess, what is that name you were talking about? What are some of the other names and sectors that you think look attractive here for 2024?
So I'm usually not a big sector investor. The one you're referring to is humanoid robotics, and I have very strong thoughts about that. And I am probably more excited about that sector than any sector in my entire investing career. And I've been very early on many of the biggest sectors, from going all in on Amazon in the very earliest days of AWS because of the cloud computing acceleration that I thought would come in future years that did fortunately play out for Amazon, as well as Microsoft. But humanoid robotics is a big one, and I will talk about that and my feelings on humanoid robotics and how big that sector can be and how to invest in it. That said, it's not always about sectors for me. A lot of times it's just about identifying change that is impacting companies for a quarter or two or three, where Wall Street maybe hasn't picked up on that change yet, and they're not seeing what I'm seeing in real time, and maybe won't see it for a few weeks or maybe even a couple months. So most of my investments are all about being a little bit early to something. And so the trade window for me is usually a few weeks to a few months on most of my observational or, what I call social arb trades. And it's all about being able to surface information quicker than others. And that's a big part of what I'll be discussing at the Money Show, is how exactly I do that. And so, by the way, it could be anything. It could be an apparel trade. It could be a trade in, technology. It could be a trade in a toy company. It could literally be anything. So I start with a really large top of funnel. And then the process I go through might spit out 2 high conviction trades a year, or it might spit out 12. And that's probably a good range for me these days, anywhere between 2 and 12 medium to high conviction trades on an annual basis. So it's not like I'm trading daily, or trading intraday. It's all about trying to find a small handful of high conviction trades where I've discovered some information that I don't believe the market has fully discovered yet or appreciated. And it's about, trading that information before it's widely disseminated and appreciated by the market. It's that simple.
Well, Chris, we're super excited to have you in Miami. I was going to actually wrap up by asking what you're going to talk about, maybe a sneak peek, but you kind of already touched on that anyway. Folks, if you're watching this, Chris is going to be joining us for the Investment Masters Symposium in Miami. It's scheduled from April 10th to the 12th. It's going to be at the Hyatt Regency Miami downtown. Again, really interesting concept, social arbitrage, and Chris is going to be joined by dozens of other investing and trading experts. So definitely check that out. Chris, thank you so much for your time. I can't wait to meet you in person there in Miami.
Yeah, thank you. And, all my socials are on dumbmoney.tv, including my Twitter at Chris Camillo. And, I hope it's warmer in Miami than the 17 degrees it is here in Dallas today. So
yeah, I mean, that's abnormal weather for Texas, I'm sure.
Yeah.
All right, take care, Chris.